Paying attention for the benefit of our clients. Investing can be a wild experience. It's dynamic, it's bewildering. It can also be very lonesome. Why? Well, the markets, they can have a mind of their own. Similar information can yield different results, different reactions. Sometimes it takes days, weeks, or months for the mood to change. Other times it's a matter of hours or even minutes. That kind of action can be maddening, especially if the market moves away from the underlying fundamentals, the earnings growth. The key is taking advantage of the market's moodiness to buy assets when they go on sale. In order for you to spot these opportunities, you need to be watching what's happening. You need to be paying attention. Paying attention, though, is different from taking action. A pilot may pay attention to changing conditions, but you wouldn't want him making moves all the time, jerking the plane all over the sky to catch a slightly better route. No, that wouldn't be good. That would make for a very unpleasant experience. Similarly, constantly moving money around to chase a short-term move can create agonizing experiences for long-term investors. You can get whiplash. Opportunities don't usually present themselves overnight. Typically, the opportunity builds over time, but you wouldn't spot the changes unless you've been paying attention all along. So how does this all apply to today's markets? Well, we've seen lots of crazy moves in recent years, moves that at the time seemed foolish and misplaced. How many people predicted in the early stages of the pandemic the market would drop more than 30%, then make a complete U-turn and surge for the next 21 months? How about when the Fed started hiking rates early last year? The expectation was that they could not go very far before something major broke. Well, we saw a short-lived issue with some regional banks this spring, but by and large, the economy has continued to function rather impressively despite 22-year highs on interest rates. From a stock perspective, mega cap tech has powered most of the gains in 2023. The rest of the market is actually up just modestly on the year. Could that continue? Sure, but not forever. Other parts of the market will need to start performing for things to constructively move higher. So there are opportunities emerging outside of those handful of big tech names. There are plenty of stocks that appear to be priced either reasonably or possibly even on sale. One of the numbers you're looking for is a stock's price relative to expected growth. For example, if you can buy a company that grows earnings at 20% a year for the same price you pay for a company that's only growing earnings at 10% a year, you may have found yourself a buy. Such pricing may mean that that company or its industry is temporarily out of favor. No different than a particular shoe being on sale because it's momentarily out of fashion. Once you've identified an opportunity, the trick is being patient enough to wait out the market's current mood. With investing, the rewards come to those who are prudent and patient, and that's what we aim to do for our clients.